Hey everybody, welcome back to another installment of the Currency Pros course. Now today we're talking about imbalance. Okay, this is going to be a brief video. There's not too much to talk about, but it's definitely an important aspect to our trading strategy that we need to cover and have a firm understanding of. So as you can see in front of me here, I have the Currency Pros ebook pulled up, and the reason for that is I already have a very good description and lesson about imbalance here. So what I'd like to do is just read through what I've written in the ebook, and then after we've covered that, I want to go through some real life chart examples, okay, so you guys can see it in action. So let's get started. One of the main criteria we look for when identifying an order block or refined supply and demand zone is imbalance, okay? So just to clarify, imbalance is not something that we trade solely. It's not any sort of entry criteria. As you all know by now, we trade order blocks, or as some call it, just refined supply and demand zones. Now, imbalance and a few other things as well, which we'll go over in future videos, simply acts as confluence to build a case behind whether or not our order block is valid or potentially invalid, okay? So, excuse me. So, imbalance is when an order block is responsible for creating such impulsive volume in the market that it throws off the equilibrium between buyers and sellers, forming a gap. Okay, so to understand imbalance, you have to understand how the market moves. Now, with the Forex market especially, there is a constant equilibrium, or at least the goal to have a constant equilibrium between buyers and sellers. Okay, so even in this example here, you can see all of these small candles here. It's very efficient price action, okay? We have selling momentum, buying momentum, selling momentum, buying momentum, and everything gets covered here. It's very efficient, balanced price action, okay? But as soon as we see huge full body candles, it creates an imbalance in the market. As you can see here in the diagram, okay? It creates a gap. We have one there, and we have one here too. These massive full body candles, they represent that for a certain period of time, let's take this one for example, for a certain period of time, only buyers were in control. There is no equilibrium between buyers and sellers. There's no give and take. There's only give, okay? So that creates inefficiency and imbalance in the market, all right? So as I said here, this is referred to as imbalance or inefficient price action, short form IPA, which some people like to use. Now these gaps act as a magnet for price to retrace to in order to correct the disturbance in market equilibrium, okay? That's a very important point to take note of. So we don't trade based off of these, but we use it as confluence because as I placed in the diagram here below, we have a lower time frame order block. It's maybe not visible on this time frame, but a refined lower time frame order block is in this area right up here, okay? Now, we've set entry parameters. You know, we're anticipating price to trade higher towards our lower time frame order block and then go short from there based on our analysis, right? Now, what adds confluence to the fact that price is going to head towards that lower time frame order block is the fact that we have imbalance or inefficiency in this area, okay? Because price is drawn towards this like a magnet in order to correct the inefficiencies, okay? There has to be balance, there has to be equilibrium in the market. So whenever this happens, it's very highly likely that price is going to travel towards that area, okay? So when we were down here and we located this order block up here and then spotted inefficiency or imbalance here, we can say to ourselves, okay, it's very likely price is going to travel towards that order block where we can then look for a short opportunity, okay? Let's head over to the next page because there's 2 pages in the ebook that cover imbalance. So let's go over what I wrote here. So as you can see, we aren't trading based on the imbalance zone itself, but rather using it as confluence to strengthen our decision to target an entry from an order block, okay? An order block that acted as the point of origin for such a disruption in price is considered a higher probability entry point. Okay, now let me quickly cover that. So there's order blocks all over the place, right? This is where a lot of people get confused with order block strategies or refined supply and demand because they see them all over the place and many of them are valid, right? But some have a higher probability of working out than others do. And one of the things that increases the probability of success is the fact that that order block was responsible for, one, a break of structure that we've gone over in previous videos, of course. So a break in market structure, but the second main confluence is that it actually created an imbalance. It created a gap in price action, okay? That's very important because, like I said, it acts it turns price into like a heat-seeking missile, basically. It wants to seek out that imbalance and correct it. And then from that point on, once the imbalance/inefficiency is corrected, then price can continue and do what it was intending to do in the first place, okay? So another point here is when it comes to imbalance or inefficiency zones, there's no telling when they will be filled, okay? So it could happen within a couple minutes, it could happen in a couple hours, sometimes it could take a week or a month or more. It depends on the time frame you're trading on, most importantly, but there's really no telling when it's going to get filled. But we know certainly that they will fill when the time is right, okay? Now, this is why we don't attempt to trade them on their own. It's an important tool to keep in your arsenal when analyzing the markets, okay? So, like I said, it's not something we base our entries off of. It's something we build our case off of, okay? So we find an order block. We have to check off some boxes, right? Did it break structure? Did it create imbalance? Is price approaching it correctively or impulsively? There's a bunch of boxes that we need to check, right? So this is just another one of those boxes, and it's another tool that we can keep in our arsenal, all right? So as you can see here, price traveled towards that imbalance zone, filled it right around here, so it corrected that imbalance. And because it already did that, right, it completed its mission, then it also mitigated the lower time frame order block that we had up here. Once that mitigation was performed and the imbalance was corrected, you see how price just melts away in the direction that it was intending on taking, right? And that's how we can take advantage of imbalance in the market. We use it as confluence to strengthen our order block, and we take our entries from the order block, right? So now that we've gone over those 2 pages in the ebook in a little further detail, what I'd like to do is head over to the charts and go over a few examples here that weren't in the ebook so you can see it more practically, okay? So we're currently on Australian dollar, US dollar, on the 1 hour time frame. Now I'm not going to use the replay tool and set trade parameters and all that kind of stuff. This video is more so about being able to train your eyes to spot these things in the market. You need to be able to spot the imbalance until it becomes second nature to you, okay? So there's a few things I can see right off the bat. Now, I didn't cherry pick these. I'm just looking at the chart in front of me and I see plenty of imbalance, but there's a few that I'd like to go over that are really good examples. So let's start from here, okay? We have a clear order block there. Clear order block right here, this candle here. It created significant imbalance because look at all that volume that pushed into the market right after that small buy candle. It created a lot of imbalance. I'm going to mark these out shortly. And it eventually broke substructure. And this order block here, it led to this whole move, right? Which broke more substructure, more structure, more structure. It was responsible for a lot of disruption in the market, okay? So let's just quickly highlight that order block. Let's just label it 1 hour OB, okay? Now I'm going to use the Fibonacci tool to highlight the imbalance here, okay? This right here is the imbalance. You know what, let me hide the order block for 1 second just so you can more clearly see the imbalance. So let me explain to you why this is imbalance. I set the Fibonacci tool right at the lowest point of that last buy candle before the disruptive move. And the bottom of the Fibonacci tool, keep in mind, we don't trade based on Fibonacci. I simply use the tool to map things out. So the bottom of the Fibonacci tool is set at the highest point of the next candle following this full body candle. Okay, so here's the thing. Price was trading high, created a minor low, went up a little bit, failed to break that, dropped very impulsively. And once it did drop, kind of bottomed out here, traded a little bit higher, created that minor high right there, and then dropped off again from there. So you see how we made a low point here and a high point here, right? Everything in between that is imbalance or inefficiency, okay? That's inefficient price action because there was no equilibrium between buyers and sellers. Now, if price created this huge candle, and then this candle here had enough momentum to continue higher and higher and higher until it reached at least this mark here, then there would simply be no imbalance in the market. That would be very efficient price action, okay? There would be no gap anymore. But that's not what happened. What happened is we kind of topped out here and then started dropping off once more. So that leaves imbalance in the market, and we know that at some point price is going to have to correct this imbalance. Now, let me delete that for a second. I'm going to bring back the 1 hour order block. So this is the order block. We would be targeting this for a short position, right? Hypothetically. I'm not going to get too deep into, positions here, but theoretically we'd be targeting this 1 hour order block for a short position because there's bearish order flow. It broke structure to the downside multiple times. This is the order block, okay? Now, the imbalance is here. Okay, imbalance. Right in that zone right there. So we know that even though price is trading so much lower, we know that at some point, theoretically, it should come back to fill that imbalance, okay? It starts to right around here. Obviously, we're moving up very correctively towards that zone. Start to fill it here, but then we make one last push, fills the imbalance completely, and what do you know? It reacts very nicely to our 1 hour order block, right? It taps into the 1 hour order block. From that point on, we start trading lower. Now, if you were in a short position, this would obviously present a good amount of profit, and of course, we would have lower time frame order blocks within that wick as well. Price comes back up, mitigates anything within that wick, and then really melts from there, okay? So this is just a good example of how we can utilize the knowledge of inefficient price action or imbalance to build a case behind our bias, okay? So we have a short bias here, but the more confluence we can add up to go with our short bias, the more confident we can be in our overall trade, okay? Now, even within this bullish leg here, leading up to that point, we have imbalances there as well, okay? So let me actually quickly use the replay tool because this might be a better visual. Okay, so you know what? Let me take it back a little bit further to right here. Okay, so price reacted to something here, probably far to the left on a higher time frame, reacted to a demand level there, started trading higher, hasn't broken any structure yet, obviously. We kind of topped out here, created supply, headed back down, created a low, and then very impulsively took off to the upside. Didn't break structure just yet with that candle, but shortly after it did break structure right there. So this is the important part where we have to locate our imbalance, okay? Because we broke structure, right? BOS, break of structure. What was responsible for that break of structure? Well, this order block was responsible for that. That was the last low volume point of interest. That was the last, it was the point of origin for this break of structure. It was the last low volume candle prior to the volume disrupting the market and breaking structure, right? Like I've said in previous videos, doesn't matter if it's bullish or bearish. What matters is that it's the low volume candle. So rather than setting our order block to this huge bearish candle, we can refine it down to the small bullish candle. Doesn't matter if it's bullish or bearish. Okay, so this is our order block. Again, let's label it 1 hour OB, 1 hour order block. Now, this order block is even more valid than another order block would be because it actually created imbalance. Now, I hope you can spot the imbalance based on what we went over up here. The imbalance is, we just move this away for a second. It's the gap between this wick and this wick, okay? Now, there wouldn't be an imbalance if this wick right here was able to trade down far enough and connect with this or go past it, but that's not what happened. There was a gap in price, so only buyers were in control, right? There's a gap in price, there's no equilibrium, there's no balance between buyers and sellers, creating an imbalance, all right? Let's put our order block back there. Okay, so we know that we have a valid order block here. It broke structure, okay? And we have imbalance here as well. So that creates a higher probability scenario that this order block will be mitigated and continue bullish order flow from that point on, okay? So we could certainly look at placing a long position here. And that's exactly what happens. Price taps into the order block, corrects the imbalance / inefficient price action, clears that, mitigates the order block, about 50% of the order block too, which is nice, and then takes off from there, okay? Look at that. So that would have been a beautiful long position as well. And you could even, once you enter a long position here, your targets could be set at the 1 hour order block up here, because we also have good understanding that price should reach back to that level because of the imbalance here, okay? So rather than, let me just map this out for you quickly so you understand what I'm talking about. Set an entry at the open of the order block, for example, stop loss just below. Now, instead of just simply targeting our profit for the recent highs, like this high here, for example, or even this high here, that would still present a good opportunity, 5% to that high, just over 5.5% to that high. But we know there's imbalance here. So it's a very likely scenario that price is going to eventually reach the order block up here, right? So we could target that order block, at least the low of that order block. Now that changes things into 8.66R rather than 5R, okay? And we already saw this previously, but let's play it out anyways. Price does reach that order block, okay? From there, we'd be going short, right? Because we have a valid order block. Stop loss just above, target lows, even target this low. Right, so I'm not going to go through the whole trade. That's not the point of this, but the point is we can use imbalance and inefficiency. We can use our knowledge of that to strengthen our bias for our order blocks, okay? Locating order blocks and breaks of structure, that's a whole different thing. We've gone over that previously. But imbalance is just another tool in the shed to use towards strengthening our bias. And you can see how beautifully that can be utilized, right? We can take advantage of the market in completely different ways with complete confidence by utilizing this knowledge. All right, so I hope you guys enjoyed this video. I hope it wasn't too long. I hope I didn't ramble too much, but I'm sure there were some really good points that you guys can take away from this. So yeah, I'll talk to you guys soon. Stay tuned for the next one.